Hello and welcome. In this guide from the team here at Pro Tax Accountant, we're going to break down exactly how you can use venture capital trust tax relief to make your investments work so much harder and, hopefully slash your tax bill. We've got a really clear step-by-step roadmap for you. So let's just kick things off with a massive question. Are you leaving thousands of pounds on the taxman's table? Now, it might sound a little dramatic, but honestly, so many UK taxpayers are missing out on this really powerful tax-saving opportunity, and they just don't even know it exists. The good news? We're about to fix that for you right now. Okay, this is the number I want you to burn into your memory. 30%. That's a direct 30% reduction on your final income tax bill. So let's put that into perspective. If you invest, say, £10,000, you can literally slice £3,000 right off what you owe HMRC. It is genuinely one of the most generous tax reliefs out there, and it's designed to reward you for backing the UK's most exciting businesses. To make this all super simple, here's our little roadmap for today. We're going to start with the absolute basics, just to build a solid foundation. Then, we'll walk you through the exact claiming process. And this is important. We'll show you the common pitfalls to avoid so you don't get caught out. Then, we'll make it all real with a clear example, and we'll finish up with a handy checklist. All right. Let's dive in. Right, first things first, let's get the fundamentals down. Understanding the what and the why is so important before we get to the how. It just means you can claim with absolute confidence. So, what on earth is a VCT, a venture capital trust? Well, think of it like a special kind of investment fund. You're basically pooling your money with other investors to back a whole portfolio of really promising, smaller UK companies. The potential success stories of tomorrow. And because this can be a bit of a riskier investment, the government rewards you with some seriously attractive tax breaks. To really see how powerful this is, you first need to know what you're being taxed on in the first place, right? So here are the income tax bands for the 2025/26 tax year from most of the UK. Your VCT relief is going to directly put the tax you owe based on these rates. But here's the absolute key takeaway. You must have an income tax bill to start with. If you don't owe any tax, there's no relief to claim. Simple as that. Now, this all really boils down to 3 golden rules you absolutely have to remember. First, the relief is a straight 30% of what you invest. Second, you can invest up to a pretty generous £200,000 each tax year and claim that relief. And third, and this is the one people always forget, you must hold on to those shares for at least 5 years. Why? Well, the government wants to encourage long-term, stable investment, not just short-term trading. If you sell early, HMRC will want that tax relief back. Okay, so that covers the what and the why. Now for the fun part. How do you actually get this money back into your pocket? Let's walk through the exact process, step by step. We've broken this down into 5 really simple steps. First, just confirm you're eligible. Second, get your hands on the crucial bit of paperwork. Third, double-check their tax liability. Fourth, actually make the claim. And finally, the step that gives you total peace of mind, and that so many people miss, is just following up to make sure it's all gone through correctly. And here is a pro tip from our team at Pro Tax Accountant. Without this single piece of paper, you can't claim a single penny. It's that important. Shortly after you invest, your VCT provider will send you an official tax certificate. It might be called a VCT3 or an ITRC. Honestly, whatever they call it, this is your golden ticket. So scan it, file it, keep it somewhere super safe. You are definitely going to need it. Now, how you claim really depends on how you pay your tax. So if you're self-employed or you have other income and you file a self-assessment tax return, you'll pop it in there for a nice lump sum reduction on your bill. But if you're an employee on PAYE, that's pay as you earn, and you don't normally file a return, you can just contact HMRC directly. They'll adjust your tax code, which just means you pay less tax from your salary each month. It's the same benefit, just delivered in a different way. Okay. Stay with me here, because this is the part that trips a lot of people up. Let's talk about where things can go wrong. Paying close attention here could save you from a major headache and, potentially a big unexpected bill from HMRC. A perfect example of a special case is for our Scottish taxpayers. As you can see, Scotland has different income tax bands and rates. This can actually change your total income tax bill for the year. And remember that rule. Your relief can't be more than the tax you actually owe. So if you're a Scottish taxpayer, it's so important to use these figures to calculate your position correctly. So what are the top mistakes our accountants see every single year? Well, number 1 is selling those shares before the 5 years are up and getting a surprise bill from HMRC. Number 2 is forgetting to declare all their income, like from a side hustle, which just throws the whole calculation off. But honestly, the biggest one of all, assuming the relief is automatic. It's not. You must actively claim it, or you will get nothing. All right, theory is great, but numbers make it real, don't they? So let's walk through a proper example to see the incredible impact this relief can have on your actual tax bill. So let's meet Sarah. She's a freelance graphic designer based in London. Her total income for the year is £55,000, which comes from her main business profits and some extra consultancy work she does on the side. This is a really typical scenario for lots of self-employed people in the UK. Okay, so first we calculate her tax bill before she makes any VCT investment. After we take off her personal allowance, her taxable income is £42,430. Based on those tax bands we saw earlier, her total income tax bill for the year comes to exactly £13,000. That's our starting point. But then, Sarah makes a really smart move. She decides to invest £15,000 into a VCT. Now, we know the relief is 30%, right? So a quick bit of math. 15,000 times 30% gives her a potential tax reduction of £4,500. Now, let's see what that actually does to her final bill. And boom, here it is. This is that aha moment. Her original £13,000 tax bill is directly cut by the £4,500 relief she claimed. Her new income tax bill is just £8,500. That is a huge direct saving, all thanks to claiming her VCT tax relief correctly. This is the real power of this scheme right here in action. Phew, we have covered a lot of ground. So just to make sure you're fully prepped to make your own claim, let's run through one final checklist. This will help ensure your claim is smooth, simple, and completely error-free. Think of this as your pre-flight check, okay? Do you know your total income from all sources? You need this to calculate your tax bill. Do you have that tax certificate? That's your proof. Have you double-checked the 5-year rules so you don't get any nasty surprises down the line? Have you filled out the right form and, this is so important, kept copies of everything? Ticking these boxes will guarantee your peace of mind. Look, venture capital trusts are an amazing tool, but they are just one part of a smart tax strategy. When they're managed properly, they can massively improve your financial situation, but it's really important to see them as just one piece of your bigger financial puzzle. Now, if any of this feels a bit much, or if your situation is more complex and you just want the peace of mind that comes from knowing it's 100% right, please don't leave it to chance. The expert team at Pro Tax Accountant is here to help. You can reach them on WhatsApp or by phone for some friendly, personalized advice. And finally, if you found this guide helpful, please make sure you subscribe to the Pro Tax Accountant channel. We post regular, jargon-free explainers just like this one, all designed to help you save money and navigate the UK tax system with confidence. Thanks so much for watching.